This video is created by Jagrat Creation. It is on partnership accounts. The concept that I want to take care of in this sum is on interest on capital. Just observe the sum on the screen, wherein main focus point is how to account for interest on capital to be given to the partners under various situations. Just observe the sum. A and B are partners sharing profits and loss in proportion of 4:1. Their capital as on 1/4/2016 is rupees 4 lakhs and 2 lakhs respectively. Prepare profit and loss appropriation account or profit and loss account, whichever is necessary, for the year ended on 31st of March 2017 under the following provisions pertaining to interest on capital as prescribed in the partnership deed. So this 1, 2, 3, 4, 5 are the options. So if 1 is there, then 2 is not there. 2, 3, 4, 5 is not there. If 2 is there, then 1, 3, 4, 5 is not there. They are options. So these are not one objective question. They are the 5 sums actually. 5 options I am going to work out. Wherein my interest is to explain you how to account for interest on capital in partnership accounting as instructed in the partnership deed. First, if the firm has a profit of 40,000 and no provision is made for interest on capital in partnership deed. So partnership deed has not prescribed anything about interest on capital. So no interest on capital could ever be given to any partner in the absence of agreement. If the partners don't agree to pay interest on capital, then interest on capital cannot be paid. The profit, whatever is there, or loss, whatever is there, is to be distributed amongst partners in the agreed ratio, that is 4:1. If the firm has a profit of 80,000 and 10% interest on capital is payable as per the provisions of the partnership deed, so profit is 80,000. Interest on capital is to be paid at the rate of 10%. So after making payment of interest on capital at the rate of 10%, whatever the profit is left thereafter will be distributed amongst partners in the ratio of agreement, that is 4:1. So out of profit, in priority, interest on capital is to be paid as agreed by the partners, and whatever the profit is left, that will be distributed amongst partners in the ratio of profit sharing. So here the interest on capital is also a mode or a type of appropriation of profit. Now in third case, if the firm has a profit of 30,000 and 10% interest on capital is payable as per the provisions of the partnership deed. See, if you look at the interest capital, 4 lakh plus 2 lakh, 6 lakhs is the total capital of A and B. Interest on capital at the rate of 10% on 6 lakhs will be 60,000. In third case, the profit is 30,000. So profit is not sufficient to pay the total amount of interest on capital. So if the profit is more than, see in case of second instance, profit is 80,000, which is more than 60,000. 6 lakhs is the capital, 10% interest there on 60,000. So profit 80,000 is more than 60,000. So you can pay the total amount of interest on capital 60,000, and whatever the balance profit left 20,000 will be distributed amongst partners in the ratio of profit sharing. But in case of third scenario, the profit is only 30,000. The profit is not sufficient to pay the total amount of interest on capital, that is 60,000. If the profit is short, means the profit is not sufficient with which you can pay the total interest on capital as provided in the partnership deed, then what to do? You should pay interest on capital to the extent profit available. You should not pay total interest on capital, but the interest on capital is to be given to the extent possible out of the profits available. So this is the interpretation of the third case. If the firm has a profit of 30,000 and 10% of interest on capital is payable, and interest on capital is considered as a charge against profit as per the provisions of the partnership deed. In fourth case, profit is 30,000. Total interest on capital required to be paid is 60,000. So profit is short. Interest on capital to be paid is 60,000, more than the profit available. Now here you are told that the interest on capital should be treated as a charge against profit. So interest on capital in first, second and third cases, it was an appropriation of profit. While in case of fourth and fifth cases, it is a charge against profit. So in case of 1, 2 and 3, I'll be preparing profit and loss appropriation account. And in case of 4 and 5, I'll be preparing profit and loss account. Because interest on capital is considered as a charge against profit. What is the meaning of charge against profit? Charge against all the expenses debited to profit and loss account are such expenses which are required to be incurred for the purpose of earning profit, or which are required to be debited to profit and loss account as per the matching concept of accounting. So here interest on capital is considered as a charge against profit. So if this capital interest is not paid, or if this much capital is not introduced, the firm cannot earn the profit at all because of this funds injected by the partners. So which will be treated, the interest on capital should be treated as a charge against profit. So interest on capital is considered as an expense inevitably necessary for the purpose of earning the profit, and that's why it is to be debited to profit and loss account. And this is so because it is agreed by the partners. So partners have agreed to consider that interest on capital is a charge against profit. So it will be debited to profit and loss account. In the fifth case, there is a loss of 10,000 and interest on capital is to be paid 60,000. Interest on capital is to be paid as a charge against profit. So 10,000 loss, interest on capital paid 60,000. So total loss will be 70,000. That loss will be distributed amongst partners in the ratio of 4:1. In case of fourth case, the profit is 30,000. Interest on capital to be paid 60,000. Interest on capital required to be paid is more than the available profit. So it results into loss because interest on capital is considered as a charge against profit. So in case of 4 and 5, we are going to prepare profit and loss account. And in case of 1, 2 and 3, we shall prepare profit and loss appropriation account. Just observe, let me start with it. So in first case, I have prepared profit and loss appropriation account. Profit 40,000 credited to the credit side of profit and loss appropriation account. No provision is made for interest on capital in partnership deed. So no interest on capital is to be paid. So you have to distribute the profit straight away in the agreed ratio, that is 4:1. So 40,000 will be distributed in the ratio 4:1. A gets 4/5 of 40,000. A gets 4/5 of 40,000, that is 32,000, and B gets 1/5 of 40,000, 8,000. So this profit will be credited to the partner's capital account, and this appropriation of profit is debited to profit and loss appropriation account. So what is the important point of this point number 1? If the interest on capital is not agreed by the partners, it should not be paid. And straightway, profit should be distributed amongst partners in the ratio of profit sharing. Now let me consider the second option. In case of second option, the profit is 80,000. Interest on capital agreed to be paid 10%. 4 lakhs into 10%. So A gets 4 lakhs into 10%, 40,000. B gets 2 lakhs into 10%, 20,000. Total interest on capital paid. It's an appropriation of profit. Out of 80,000, 60,000 profit appropriated in the title of interest on capital. So 60,000 profit distributed under the name of interest on capital. Now what's the balance profit? Balance profit 80,000 minus 60,000, 20,000 is a balance profit. That will be distributed in the ratio of 4:1. So 20,000 into 4/5 is the share of A. 16,000. 1/5 of 20,000 is the share of B. So the capital of A will be credited with 40,000 as interest on capital. Capital of A will be credited with 60,000 as share in profit. Same way, capital of B will be credited with interest on capital with 20,000, and capital of B will be credited with share in profit 4,000. This is how 80,000 profit is distributed. Here profit is sufficient to pay the total amount of interest on capital. So interest on capital is paid as agreed, and whatever the profit left thereafter is distributed amongst partners in the ratio of profit sharing. Now let me switch over to the third option. In case of third option, profit is 30,000 and interest on capital is payable 60,000. So profit is short. Then the amount of interest on capital required to be paid. So here the profit is 30,000. Notice that interest on capital is paid to the extent of profit available. Interest on capital is paid to the extent profit available. So total amount of interest on capital is not paid. Total amount of interest on capital will be 6 lakhs. Because 4 lakhs plus 2 lakhs, 6 lakhs. 6 lakhs into 10%, 60,000. So total interest on capital payable 60,000. We don't have sufficient profits to pay. Total amount of interest on capital 60,000. So interest on capital will be paid to the extent profit available. So here, as I told to you, interest on capital on 4 lakhs, 10%, 40,000, 20,000. So total interest on capital required to be paid is 60,000. But the available profit is 30,000. So when the profit is not sufficient to pay the interest on capital, the insufficient profit will be distributed amongst partners in the proportion of interest on capital. So available profit will be distributed, will be paid in the ratio of capital interest. So 30,000 will be distributed in the ratio of 4:2, that is 3:1. So 30,000 into 4 by 6 and 30,000 into 2 by 6. So this is the extent to be 20,000 and 10,000. Interest on capital will be paid to the partners. So if the profit is not sufficient to pay the total amount of interest on capital, and interest on capital is not considered as a charge against profit, in such situation, the interest on capital should be paid to the extent profit available. So this is an important explanation in case of third option. Now fourth option. This interest on capital will be credited to the partner's capital account. Now fourth option. If the profit for the firm is 30,000 and 10% interest on capital is payable and interest on capital is considered as a charge against profit as per the provisions of partnership deed. So here interest on capital is considered as a charge against profit. When it is a charge against profit, it is not an appropriation of profit. When it is a charge against profit, it should be debited to profit and loss account. It did not be debited to profit and loss appropriation account. Hence, here I have prepared profit and loss account. That's an important point. Profit 30,000. Interest on capital is considered as a charge against profit, so it has to be paid as agreed by the partners. So in 4 lakhs, interest is to be paid to A at the rate of 10%, 40,000. To B, 2 lakhs into 10%, 20,000. So 60,000 interest on capital is to be paid. My profit is 30,000. So if I pay 60,000 out of profit of 30,000, it will result in a loss of 30,000. That loss is required to be distributed between A and B in the agreed ratio, that is 4:1. So 60,000 minus 30,000, 30,000 is the loss that will be distributed between A and B in the ratio of 4:1. So 30,000 into 4 by 5 and 30,000 into 1 by 5. This is the share of A and B in loss, because here interest on capital is treated as a charge against profit. And when it is treated as a charge against profit, I have prepared profit and loss account. I have not prepared profit and loss appropriation account. That's an important point to be noticed. Now, next option. There is a loss of 10,000. 10% interest on capital is payable. Interest on capital is considered as a charge against profit as per the provisions of partnership deed. So interest on capital is not an appropriation of profit. It is a charge against profit. When it is not an appropriation of profit, it should not be debited to profit and loss appropriation account. As it is a charge against profit, it will be debited to profit and loss account. So here I have prepared profit and loss account. Loss 10,000 debited to the profit and loss account. Interest on capital paid on 4 lakhs at the rate of 10%. A gets 40,000. B gets 2 lakhs into 10%, 20,000. Total 60,000. Interest on capital to be paid as a charge against profit. So 10 plus 60 is 70,000. So total loss 70,000 will be distributed between partners in the ratio of 4:1. So 70,000 into 4/5 is the share of A in loss. And 70,000 into 1/5, 14,000 is the share of B in loss. This loss will be debited to the partner's capital account, and this interest on capital will be credited to the partner's capital account. This is how I have tried to explain you if the interest on capital is considered as a charge against profit and otherwise it is considered as a mode of appropriation of profit. So by taking these 5 various options, varieties of options, I wanted to explain, or I wanted to make clear when interest on capital is to be considered as an appropriation of profit, when should it be considered as a charge against profit. Remember that it is considered as an appropriation of profit if so agreed by the partners. It should be considered as a charge against profit if it is so agreed by the partners, but you have to distribute the profit or loss considering interest on capital by carefully looking at the agreement between the partners. Now I have explained 5 options. Now I want to present all the 5 options for your comparison on one screen. Notice it. So this is option 1, this is option 2, option 3, option 4 and option 5. In these 2 options I have prepared profit and loss account. In these 3 options I have prepared profit and loss appropriation account. Just observe, have a comparison in your mind, how the changes in accounting is being done. So I have tried to explain you the concept of profit and interest on capital as agreed by the partners in the partnership deed. 4 various options are considered for your understanding. I feel that you have followed all these things. Thanks to all of you.